You don't need capital to start trading. You need a system, the right mindset, and a reason big enough not to quit. I started with exactly $0. No capital, no experience, no mentor, just a demo account and a goal to become a disciplined trader. No luck, no signal groups. I once deposited $100 and lost it all in a few days, chasing so-called hot tips. So I went back to demo, trained every trade like it was real, and I realized practicing the right way with fake money is worth more than losing real money without knowing what you're doing. In 2025, the crypto market is more brutal than ever. Fake signals, pump and dump coins, FOMO, hype tokens, traders preaching strategies they've never actually used, newbies jumping in only to get chewed up and spit out by the market. You don't have to be the next victim. What you need is a clear roadmap: demo, small account, solid system, slow, steady capital scaling. This isn't a get-rich-quick video. This is a psychological boot camp for beginners starting from zero, for those who want to go far instead of burning cash learning the wrong way. If you're ready to build a system from $0 and turn skill into an asset, let's begin. 1. The power of a demo account. Most beginners think, I need a few $100 to start learning how to trade. I used to think the same. Then I deposited my first $100 and lost it all in just 3 days by following signals from a free group. No plan, no day, no idea why I entered the trade. Just someone said so. But I didn't quit. I went back to the testnet and started paper trading like it was real money. Paper trading is not for messing around. If you treat a demo account like a playground, you're training carelessness. But if you treat it like a lab, a dojo, a place to practice each strike like a samurai who hasn't held a real sword yet, you're on the right track. I began setting my own rules. No entry without a handwritten reason. No breakout trades without volume confirmation. No adjusting stop loss mid-trade, even if emotions scream at me. Even though it was a demo account, I treated every trade as real, because it's psychology that kills you, not numbers. The 3-step practice model, TIT, before every trade, I wrote 3 things in my notebook. Thesis: I'm going long on ETH because it bounced off a demand zone, positive funding plus H4 forming a bullish flag. Invalidation: if ETH closes below 2,450, set up invalid. Target: take profit at 2,480, H1 resistance, fib 1.618. At first it felt tedious, but after 3 weeks, I realized having a clear thesis for every trade kept me grounded and confident. Trading journal, the mindset shifter. I created a simple Google sheet. Every night I spent 10 minutes reviewing date, pair, entry, SL, TP, result, entry reason, lesson. After 1 month, I had over 100 trades and a crystal clear picture of my bad habits. FOMO after 3 green candles, moving stop loss when slightly in the red, being greedy and not taking profit near target. I didn't need anyone to call me stupid. The spreadsheet said it all. Lessons from failure for free. You know what hurts more than a losing trade? A winning trade by pure luck. When I first made 28% profit from a short on SOL, I thought I was enlightened. The next week, I tripled my lot size and blew my demo account. Thank God it was only a demo. I lost the illusion, not real money. 30-day drill for beginners. I did this exactly. Week 1, pick one price pattern. I chose breakout with retest. Week 2, risk exactly 1% per trade. Formula, risk dollars / SL leverage equals lot size. Week 3, trade only 2 hours per day. I chose 9 to 11 a.m. and 8 to 10 p.m. Week 4, review, find recurring mistakes, write down 3 things I'll never do again. After 30 days, one thing was clear. You don't need a real account to grow. You need seriousness. I was no longer the guy watching 100 plus YouTube videos titled Top 5 Pump Coins This Week. I became an apprentice of the market, patient, disciplined, no illusions. Starting with $0 saved me from losing $5,000 to stupidity. Now I trade real money, but my mind still treats it like demo. Every trade has a thesis, a stop, and a clear target. If you're starting from zero, congratulations. You're in the right place to build a system, a mindset, and a version of yourself that can trade to live, not gamble to lose. And Charge 2, the psychology of volatility, mental survival in the madness of crypto. Crypto is not for the faint of heart. No lunch breaks, no circuit breakers, no one's coming to rescue you from liquidation. It's a direct stress test on your nervous system. Volatility doesn't kill. Reacting wrong does. I once saw my BTC short up nearly 70% in a matter of minutes. I didn't close, I thought it's going lower. One reversal candle wiped out all my profit, then liquidated the whole position. I didn't lose because my analysis was wrong. I lost because I couldn't stay calm. Emotions are the invisible enemy. In crypto, you don't lose due to lack of knowledge. You lose because you panic. Red candle, panic sell. Green candle, FOMO buy. In profit, don't close, afraid to miss the big move. Volatility doesn't create your weakness, it reveals it, and that weakness is you. Mistake number 1, I'm missing out. The first time I watched Doge pump 300% from the sidelines, I couldn't sleep. I thought, everyone's tripling their account and I'm just sitting here. Next morning, I FOMO'd at the top and got dumped on minus 40% in 2 hours. That's when I learned, open quote, you're not missing out on a chance. You're being spared from a crash you're not ready to survive. Close quote. I wrote my own emotional survival protocol. I started taking my emotions seriously. I wrote a checklist I had to follow before any trade. Clear setup, no defined entry, SL, TP, no trade. Set orders in advance, no manual entries. Avoid emotional execution. Don't look at the chart after entry, only react to alerts. If SL hits, take a 30-minute break. No revenge trading. It didn't make me rich fast, but it saved me from 80% of psychological blowups. Emotional journaling, the ignored practice. I didn't just record price, I wrote exactly what I felt when entering the trade. Time, emotion, action, result. 10:45. Euphoric after winning trade. Entered early without clear signal, minus 2.5% loss. 40 anxious, fear of giving back gains. Moved SL too soon, stopped out, price hit target. When you start seeing yourself in the charts, you start truly trading. I learned to be still in the storm. One time, I entered a short on ETH and it went slightly against me. I wanted to close, but I remembered, open quote, if the analysis is correct, this is just a psychological shakeout, close quote. I didn't touch it, didn't open the chart. Hours later, ETH dumped hard, hit my TP perfectly. I wasn't happy because of the profit. I was proud because I stuck to my rules while everything inside me screamed, cut it. 5 survival questions before you click buy. 1, am I entering out of FOMO? 2, do I have a clear plan for SL and TP? 3, am I ready to accept the loss if price reverses? 4, would I feel calm not looking at the chart for 4 hours? 5, if this were my family's money, would I still take this trade? If any answer is no, I don't enter. Truth, you don't lose because of bad analysis. You lose because you don't trust it. When volatility hits, everyone becomes a master of maybe. Maybe it'll keep going. It's just a pullback. The trend is intact. But what if it reverses? You can't trade and make guesses at the same time. You either have a system or you're playing the lottery. Crypto in 2025 means $1,000 swings in minutes. The market won't apologize for reversing. It doesn't care that you just took a loss, or that you're stressed, or that you just FOMO'd. You have to protect yourself. Volatility is the test. Your psychology is the only shield that matters. No one will ever outtrade you if you lose to yourself every single day. Hammer 3, your first crypto system. Build your first trading system. Simple, disciplined, emotion-free. Open quote, I used to think that learning just one more indicator would help me win. Later, I realized I didn't need more. I just needed a simple system and the discipline to follow it, close quote. What is a system? A trading system isn't some magical toolkit. It's a set of self-made rules you follow, no matter how much the market tries to shake you. Without a system, you will enter trades based on emotion, move stop losses because it might bounce, take profits too early out of fear, hold on to losses because you don't know when to exit, switch strategies after every loss. That's not trading. That's a chain of emotional reactions waiting to wipe out your account. I call my first system the 3x3 rule, designed for beginners, little knowledge but serious about survival. 3 conditions before every entry. No matter if you're scalping or swinging, check these 3. 1, clear trend. Use EMA 20 and EMA 50. EMA 20 crossing above EMA 50 with both sloping up uptrend. EMA 20 crossing below and sloping down downtrend. No trend, no trade. I once entered trades during a sideways market just because the candle looked nice. Did it 4 times, hit stop loss all 4 times. 2, strong retest zone. Never enter right after a breakout. Wait for a retest. Buy at support, sell at resistance. Don't FOMO when price runs too far from balance zones. Entering midair gives you an 80% chance of failure. 3. Clear confirmation signal. Basic confirmations include pin bar candle, long wick from resistance, engulfing candle, spike in volume at reversal zones. If one of these is missing, skip the trade. Part 2. 3 mindset checks before you click. Before hitting buy or sell, I pause for 30 seconds. 1. Am I trading out of fear of missing out? Just saw good news or a 20% pump? If yes, stop. 2. Do I have a clear setup? Entry where? SL, where to cut losses? TP, where to take profit? If any of these are unclear, don't enter. 3. Can I afford to lose this money? If you're praying please don't lose, you're not ready. A good trade isn't one that must win, but one you can handle if it fails. Part 3. 3 outcomes, 3 right reactions. 1. Win, exit, according to plan. Don't move TP up out of greed. Don't hold just because it's going well. Set TPs, exit at TP, no regrets. 2. Loss, stop out cleanly. Don't move your SL. Don't wait a bit longer. Don't enter a new trade right after a loss. Avoid revenge trading. I once lost 1.5%, tried to recover, ended up losing minus 4% more. 3. Sideways, exit early. If price goes nowhere, close the trade. You don't have to fight every time. Sitting out is also a skill. Tools for beginners. You don't need 10 indicators, just use trading free version is enough. EMA 20 plus EMA 50, RSI, only to check overbought, oversold, volume, alerts at key levels. Personal experience. I blew up for not having a system. In March 2022, I opened 9 trades in 3 days. None had a clear entry. I just saw strong green candles and jumped in. Result, 60% account. That's when I realized I wasn't a trader. I was a gambler wearing a trader's outfit. One formula I wrote after that wake-up call: system equals rules discipline. Good rules plus no discipline, disaster. Discipline plus bad rules, still lose. Only with both do you become a real trader. Log, review, improve. I kept a simple log sheet. Trade, 3 conditions met. Mindset check, result notes, followed the system. BTC long plus 2.8%, perfect retest zone, strong confirmation. ETH short, negative 3.22%. FOMO entry, no SL. At the end of the week, I review how many trades followed the system, how many were emotional decisions. Each month, I aim to increase the percent of system-based trades by just 10%. You don't need a complex system. You just need one simple enough that you won't break it. Crypto is a psychological battlefield. Your system is your first armor. Open quote. Trading with a system equals control. Trading without a system is hope. Close quote. Chapter 4. The 1% rule. How to survive before you succeed. Open quote. You don't need big wins. You just need to avoid deadly losses. I didn't blow my account because I lacked knowledge. I blew it because I bet like I was always right. Close quote. Set the right goal. Survive first, succeed later. Most beginners enter crypto with one mindset. Open quote, I need to make money fast, which is exactly why they lose faster than expected. Close quote. Truth. Your account doesn't need to double in the first month. It just needs to not get cut in half. And the rule that helped me do that is the 1% rule. What is the 1% rule? Open quote. Never risk more than 1% of your account on a single trade. Close quote. How to understand it properly. Say you have a $1,000 account. 1% equals $10. If your trade goes wrong, the max loss should be less than $10. This doesn't mean you only trade with $10 or your stop loss is 1% away from entry. It means you size your position so that if price hits SL, you only lose $10. Why 1%? Let's compare 2 risk scenarios. Trade, using 10%, using 1%. First loss, $100, 10. Second loss, $200, 20. After 3 losses, $300. After just 3 losing trades at 10% risk, you've lost nearly a third of your account. At 1% risk, barely a scratch, and you're mentally fresh to continue. Smaller risk equals calmer mindset. When you know each loss is only 1%, you stop fearing SL, you can confidently hold until TP, you don't rush to fix mistakes, you stop clicking out of gut feelings. I once took 3 straight SLs and still entered the 4th trade with a clear head because each loss was under $10. How to calculate it? Let's say account equal $500, SL size equal 50 points, Risk equals 1% equal $5. Position size equal $5. Spire 50 points equals 0.1 lot. Adjust based on the asset. Use tools like Position Size Calculator, Baby Pip's MyFX book, or build your own Excel sheet. A log I use personally: trade, coin, entry, SLTP, risk, dollar, result, notes, adjust based on the asset. 01 BTC long, 42,000, 41,700, 43,000, $10, $16, solid trade. 02 ETH short, 2,300, 2,340, 2,150, 10 minus $10. Wrong signal, still followed plan. 03 Peppy long, 0.0085, 0.0008, 0.0093, 10, minus 10, entered too early. After 3 trades, 1 win, 2 losses, account is still stable. I didn't need to win every time. I just needed to stay consistent. Habits that break the 1% rule: behavior consequence. Going big because you're sure. 1 loss erases 5 previous wins. Oversizing to recover. Enter a self-destruction loop. Not calculating SL beforehand. Oversized risk. Lose 5 to 10% in 1 trade. Personal experience. 1 SL changed my mindset. I once went all in with $300 on a small cap coin just because I felt a pump coming. SL was 10%. 1 dump. Lost 10% of my account. I got emotional, entered another trade with the remaining $400. Wrong again. $500 account, $160 in 1 morning. That day, I wrote this line and stuck it to my screen. Open quote, "You're not here to make money. You're here to not lose it." Close quote. The 1% rule, beginning of probability thinking. When you risk small, you stop expecting every trade to win. You start thinking long-term. Win rate, RR, monthly performance. You don't need to be right often, just profitable overall. Example, win rate 40%. RR equals 1, 2, 10 trades, 4 wins, plus 8%, 6 losses, minus 6%, still plus 2% profit. All of that is only possible when no single trade can ruin you. I created external discipline. Instead of remembering stay under 1%, I built a system. Excel file that auto-calculates lot size, sticky note above the order button, open quote, "It's okay to be wrong. It's not okay to lose big." Close quote. Discipline isn't about memory. Discipline is designing an environment that doesn't allow mistakes. The 1% rule isn't flashy, but it's why you're still standing after 6 months. Most beginners don't lose because of the market, not because they lack knowledge, but because they were too confident. You don't need to win big. You just need to not lose big. Chapter 5. The mindset shift, mastering the trading psychology of long-term survivors. Open quote, "Winners aren't the smartest. They're the ones who can control their own minds." Close quote. How are you trading? Are you trading based on signals or emotions? Are you entering trades from a system or because it just feels right? Are you judging your trades by results or by how well you executed the process? If your emotions still swing with every win or loss, you haven't stepped into professional level thinking, from gambling to thinking like a fund manager. New traders often think like gamblers. Open quote, "This trade has to win. I need to recover. Been losing all week. This one must work. It's breaking out. Go big or go home." Close quote. Meanwhile, real traders think like probability-based operators. Open quote, "Does this trade follow my system? If I did this trade 100 times, would I do it the same way? The result doesn't matter as much as whether I followed the process." Close quote. Personal story. I was once a systematic gambler. I thought I had the right mindset, used indicators, had setups, managed risk. But in reality, I used systems to justify emotional decisions. I'd want to buy near support, then search indicators to back it up. I'd lose 3 trades, then make up new rules for trade number 4 to recover. I wasn't disciplined. I was trading emotions in the costume of technical analysis. Only when I began journaling and grading my discipline did I realize, open quote, "I didn't need winning trades. I needed consistent behavior." Close quote. What is probability thinking? No trade has a 100% chance of success. A good strategy wins over 20 to 50 trades, not just 2. Losses are fine if the trade followed your process. I changed how I reviewed my trades. Instead of asking, open quote, "Did this trade win?" Close quote. I started asking, did I enter based on a real signal? Did I respect my SL and TP? Was I overtrading out of impatience? Did I follow the 1% risk rule? When I reviewed based on process, emotions no longer controlled me. Why good traders don't stare at charts all day, because they have a predefined system, know when not to trade, don't need to chase setups every hour. Right thinking, less time, better results. System thinking. Trade like an athlete. A professional athlete doesn't just try to win today's game. They train technique, recover, and optimize strategies, long-term mindset. Traders should do the same. Instead of making back losses, they ask, open quote, is my strategy working over the last 20 trades? If repeatable, keep going. If not, optimize. Close quote. You don't win from a moment of luck. You win from a system that can reproduce wins. Tools that help me shift my mindset. 1. Trading journal for disciplined scoring, trade followed system, risk managed, emotional state, discipline score, discipline set. Euro 1, calm, 10/10. Euro 2, early entry, rushed, 6/10. Euro 3, increased lot size, anxious, 5/10. I didn't just track wins, losses. I evaluated whether I was trading like the version of myself I wanted to become. 2. Pre-trade checklist, clear signal based on system, risk calculated under 1%, SL and TP clearly defined, acting out of FOMO or revenge, am I emotionally prepared for a loss? Every time I press buy or sell, I go through this checklist. New belief. I don't have to predict the market, just execute right. When you remove the pressure to be right, you become clear-headed, less prone to FOMO, less likely to overtrade, more focused on long-term strategy, performance, reviews. You're not fighting the market, you're competing with yourself. Open quote, who's more consistent, your discipline or your impulses? Close quote. Reality, the traders I admire aren't the smartest. They don't have superior IQ. They don't magically time tops and bottoms. They have a steady mindset and unshakable discipline. They use simple systems, but execute them flawlessly. They're not emotionally attached to wins or losses. The moment I realized trading is a game of reaction, not prediction. I used to think, open quote, I must predict the right direction to win. Wrong, close quote. Now I know, open quote, reacting correctly to predefined setups is what makes you last. Close quote. You don't need to outsmart the market. You just need to define clear setups, react when they appear, sit tight when they don't, repeat. The mindset of long-term survivors isn't about how much they win. It's about how they think when they lose. They understand each trade is part of a probabilistic series. Today's result means nothing without system alignment. What they're building is a habit, not instant success. Open quote. Trading is not a game of intelligence. Trading is a game of the mind. Close quote. Husher 6. System over emotion. Design the system first, trade later. Open quote. An average system executed consistently will outperform a genius without discipline. Close quote. Trading is not for emotionally reactive people. In life, instincts can save you. In trading, they destroy your account. You see price spike, heart races, impulsively enter. You see a red trade, panic, close early. You lose 3 trades, anger, revenge trade to get it back. None of that is due to lack of knowledge. It's because you don't have a system strong enough to control your emotions. I used to trade without a system. First week, I made a real profit, 12% in 1 week. I felt unstoppable. Next week, I traded like a gambler. No setup, no stop loss, no risk-reward ratio, increased lot size when losing, held on to losing trades, hoping result, total wipeout. That was the first time I stared at the chart for 30 minutes in silence. And the first time I realized being good doesn't matter. Having a system does. What is a trading system? A trading system is a set of predefined rules you commit to, regardless of your emotional state. It's like autopilot for an airplane. When the market shakes, you don't crash. You follow your dashboard, your system. What should a system include? Clear entry setup. Which pattern are you trading? What are the specific conditions? Fixed timeframes and trading hours. Are you trading on H1 or H4? Only between 8 a.m. to 11 a.m.? Detailed risk management. How much risk per trade percent? Where is the SL? What's the TP ratio? Fixed entry and exit rules. What must happen before entering? When to take profit? When to move SL? Rules against overtrading, revenge trading. Stop trading after 3 consecutive losses. No trading after 9 p.m. Journal after every trade. Why write it down? Saying I know what I should do isn't enough. You must document it step by step like a standard operating procedure, SOP. When you're tired, anxious, or euphoric, that paper keeps your discipline in place. I taped my checklist to the monitor. Every time I wanted to trade, I had to check off 5 boxes. Missing one? Sit out. Even if the price moves, even if it feels right. Open quote. If there's no clear reason to enter, staying out is the right move. Close quote. How to build your first system. Keep it simple. Step 1, choose a simple pattern. Example, H4 resistance breakout. Price breaks resistance clearly, volume increases. RSI crosses 60. Entry, H4 candle closes above resistance, SL below breakout zone, TP 1-2 ratio, or next resistance zone. Step 2, set trading rules. No trading within 24 hours of major news. Max 2 trades per day. No trades after 3 consecutive losses. Step 3, backtest, use TradingView replay mode. Simulate 100 trades with your rules. Track win rate, RR, drawdown, max losing streak. If after 100 trades, win rate 40%, average RR 1.8, drawdown 10%, you've built a viable system. Go live. Serious demo trading. Don't treat demo as practice. Demo like it's real, know your trades, feel your emotions, follow the system 100%. I demoed for a month. Profit was small, only 4%. But the real value? Open quote, I built the habit of doing it right before using real money. Close quote. Why systems shut down emotions. A system removes the 3 most dangerous feelings. FOMO, system says not enough conditions, stay out. Anxiety, SL is fixed, risk is pre-calculated. Greed, hope, TP is set, RR is locked. No room for hope. When you don't make decisions every second, stress disappears. A small story, my most beautiful losing trade, I entered an ETH breakout trade. Setup was complete, perfect entry. RR equals 1 to 2. 2 hours in, price reversed, hit SL. I lost $57. But I wasn't mad because it followed every rule. I wrote, executed perfectly, loss was worth it. Open quote, losing the right way made me a trader who could last. Close quote. A system doesn't need to win every trade. It just needs you not to break it. Systems don't need high win rates, just solid RR and consistency. Most new traders destroy their own systems after a few losses. If you've ever changed system after 2 losses, increased size after a few wins, abandoned rules during sideways markets, you're trading emotions, not systems. Systems build habits. Habits build profits. My routine, 6 a.m., open charts, no trades, just analysis. 9 a.m., check for valid signals. 3 p.m., exit or hold based on rules. 5 p.m., journal. Sunday, review week, no trading. That rhythm keeps me mentally safe. No more glued to charts 24/7. No more emotional roller coasters with every candle. Final warning. A good system won't make you rich fast. It helps you survive long enough to become profitable. A trader without a system might triple an account, then lose it all. A trader with a system can make 5% monthly for 3 years and succeed for real. Open quote, which one do you want to be? Close quote. Your system doesn't need to be complicated, just clear and consistent. Emotion destroys, system protects. Write your system down, review it daily. Backtest long enough. Demo seriously. Trade live with discipline. Open quote. It's not about controlling your emotions. It's about not letting them enter the room in the first place. Close quote. 7. Rules, routines, and rhythms, turning discipline into trading instinct. Open quote. When emotions speak, discipline is your shelter. Close quote. I used to think success in trading meant having a better strategy. After a few months, I realized, open quote, I didn't fail because I lacked strategy. I failed because I couldn't follow what I already knew. Close quote. Then I read one quote that changed everything. Open quote, you don't rise to the level of your goals. You fall to the level of your systems. James Clear. Close quote. The cold truth. Discipline is the #1 factor in success or failure. I once knew a trader who was brilliant. He understood every indicator, could analyze every wave fluently, but he never followed his plan. Sometimes he'd enter too early, sometimes he'd skip the stop loss, other times he'd increase lot size based on a gut feeling. His cycle: win, overconfident, lose, depressed, quit, return. I was exactly like that, and I learned, open quote, knowledge helps you understand the market. Only discipline helps you survive it. Close quote. But how do you build discipline as a human? You can't rely on motivation. You can't just say, starting tomorrow, I'll be more disciplined. You need something else. Routine. Part 1. Rules, the backbone of discipline. Start with clarity. Start with rules. Rules are your guardrails to protect you from yourself. Like barriers on a highway, they keep you safe even when you're moving fast. My non-negotiable rules: no trades without full confirmation from my system. No trading when angry, sad, or sleep deprived. No revenge trading. After 2 losses in a row, rest for 24 hours. No increasing lot size until 10 stable wins. No trading outside scheduled hours. I posted these on my wall. Every time I want to break one, I remind myself, open quote, no single win today is worth losing my long-term self-control, close quote. Part 2, routines. Discipline becomes habit. You can't be disciplined if every day is different. Discipline isn't a burst of effort, it's the byproduct of repeated routines. Morning routine. Before looking at charts, wake at 6:30 a.m., 15 minutes of exercise, drink water plus 5 minutes of stillness, journal current emotional state, tired, calm, pressured, check macro news, Cointelegraph, crypto panic. Why? Don't trade while foggy. Reset your nervous system before entering the mental battlefield. Pre-trade routine, trading by checklist. Scan H4, H1 signals. Are all system conditions met? Is risk 1.5%? Any major news ahead? Am I trading out of boredom? If yes, enter trade. If not, stand aside and log the reason why. Build a reflex. Only trade when your checklist lights up. Post-trade routine. Log and release emotions. Record entry SL, TP, emotions before and after. Was the trade within system rules? If win, did I follow RR? If loss, what went wrong? What did I learn? I use a Notion template for every trade. Each one logged like a case file. Nothing left out. Why? The mind calms when it's expressed rather than repressed. Part 3, rhythms. Let discipline flow into your lifestyle. If routines are daily habits, then rhythms are your long-term tempo, as if you're dancing with the market, not fighting it. Weekly rhythm, trade by the week, not the minute. Monday, no trades. Analyze big picture only. Tuesday, Thursday, active trading days. Friday, close positions, no new entries. Saturday, Sunday, weekly review, rest away. Why? Weekly flow prevents overtrading and gives time to recover and learn. Monthly rhythm, trade to thrive, not just survive. Month 1, serious demo trading. Month 2, small real account, $100, $300. Month 3, scale up if stable. End of each month, read every journal entry. Every quarter, reevaluate system and performance. I remind myself, open quote, live like a real trader, not a gambler trying to survive another day. Close quote. Real experience, 1 month, living the rhythm. March 2025, I committed to live by rules, routines, rhythms only. No social media in the morning, no price checking every hour. 2 trading windows, 9 a.m. and 3 p.m., only 4 predetermined coins, 2 losses per day, stop trading, gym daily, regular meals, full sleep. Result? Profit was modest, plus 5.8%. But the real win? Absolute mental control, no more panic, no more guilt. Open quote, I didn't need to be right anymore, just be aligned with my system. Close quote. Key question, why do you trade? If you trade for emotion, thrill, hope, excitement, no rule will survive. But if you trade for freedom, longevity, mental mastery, you'll build rhythms to protect it. Core principle, discipline isn't about control, it's about design. You can't control emotions daily, but you can design an environment, schedule, and routine that reduces emotional interference. That's how discipline becomes instinct, not effort. Nasher 8, flow state in trading. Trade like water, not force-ev. Open quote, when you stop forcing control over the market, you begin to move with it. A trader who survived 3 bear markets, close quote. I used to believe success came from controlling every candle, every price wave. But the real reason I burned through my first 4 accounts wasn't ignorance, it was force. Then I discovered a concept that transformed my entire trading mindset. Flow state. What is flow? Flow is the state where you're fully focused, you're free from emotional interference, every action feels natural and unforced, you feel in sync, right time, right place, right move. It's like driving for hours without realizing time has passed, or coding, drawing, or writing for hours without fatigue. In trading, flow is when you follow your system effortlessly, without panic, without doubt. Why most traders never reach flow? Because they trade in states of fear of losing money, obsession with the outcome of each trade, forcing wins, trying to be confident while still scared. Flow doesn't come through force. It comes when your system and mindset are so clean and simple that there's nothing left to resist. What it takes to enter flow. open quote. Open quote, flow isn't luck. It's the byproduct of proper preparation. Close quote, font 1. System clarity. If you're still asking, should I take this trade? You're not in flow. I once thought flow came from inspiration, but flow comes when you no longer need to guess. Your checklist answers for you. You trade like a trained soldier. Signal A plus B plus C, pull the trigger. 2. Detachment from results. Flow happens when you accept probability. Win, no arrogance. Loss, no panic. You're simply doing your job. 3. A regulated nervous system. Few talk about this, but it's crucial. Flow doesn't happen when you're sleep deprived, worried about money, angry at someone, caffeinated out of your mind, glued to screens for 8 hours straight. To enter flow, your body must be relaxed, your mind unscattered. My first flow in trading. One morning in April 2024, I woke at 6:30. Light workout, breakfast, 10-minute meditation, then opened my laptop. BTC was retesting an old support. System gave a clean signal. I wasn't excited. I wasn't tense. I placed the trade with proper lot size, SL, TP, then closed my laptop. 2 hours later, TP hit. +3 2R. What stayed with me wasn't the profit, it was how I floated through the trade. No tension, no effort. I called it my first flow. How to design flow. Flow isn't something you wait for, it's something you design. Here's the 4-step model I built for entering flow. Step 1, flow environment. Simplify your surroundings. Only one trading platform open. Turn off Telegram, Discord, Twitter. Fix time windows, no staring at charts all day. Use soft screen lighting, instrumental music if needed. Goal, remove noise so your nervous system doesn't burn out switching focus. Step 2, flow system. So clear, you don't have to think. My system, enter only when 3 conditions are met. Risky 1% per trade, fixed RR for TP, no trade adjustment once entered. My checklist is 5 lines. Before every trade, I tick them. If one is missing, no trade. Simple. Goal, shift from decision-making to execution. Step 3, flow schedule. Limit time to avoid overfocus. 2 sessions, 9 a.m. and 2 p.m. No screens at night. After 2 losses day, stop. If unsure about a trade, don't sit and overthink it. Goal, avoid prolonged stress, the silent killer of flow. Step 4, flow feedback. Record and refine. Every time I felt in flow, I noted, what did I do beforehand? How did I feel emotionally? What was my environment like? Was I overly focused or naturally calm? Over time, I built a personal flow map, knowing exactly when and how I reached that state best. Flow is not random. It's repeatable. Once you learn to design it, flow returns like a familiar friend. I noticed, days I eat well, sleep enough, and don't force trades, flow comes easily. Days I get sucked into social media, I lose rhythm and self-control. What flow does to performance: state, mindset, actions, outcome. Normal, anxious, hesitant, changes trades midway, inconsistent results. Flow, calm, focused, executes correctly, no force, stable, reliable performance. Flow and meditation. I meditate 10 minutes each morning, not to become a monk, but to bring my mind into the present. When meditating, you observe thoughts. When trading in flow, you observe the market without trying to control it. What does not create flow? Forcing yourself to stare at charts for 8 hours, following 10 signal groups at once, trading because this one's hot, trading while mad at your partner, expecting 5R wins today. Checklist, am I in flow right now? I'm not forcing myself to act. I'm not overly concerned with win-loss. I follow my system naturally. I can walk away from the screen without worry. Trading feels light, like breathing. Trading is not a race against the market. It's a journey toward inner balance, so you can respond at the right time in the right way. Flow is the path. No force, no rush, no panic, just right action at the right moment. When was the last time you traded without stress? If it's been too long, maybe it's time to redesign how you live, not just how you trade. Trading in silence, mastering the quiet hours where traders are forged. Open quote, what shapes a trader doesn't happen during market chaos, but in the stillness, when it's just him and himself. Someone who once waited 8 hours just to not take a trade. Close quote. The truth no one tells you as a beginner. You probably think trading is the thrill of clicking buy, the adrenaline of price jumping tick by tick, the rush when your TP or SL gets hit. I used to think that too, but I was wrong. Real trading is 90 cent, nothing. No trades, no clear setups, no applause, no excitement. Just one screen, one chart, and long stretches of silence. Silence is where you begin becoming a trader. Most beginners panic in silence. They can't stand doing nothing. They force trades, they bend rules, they convince themselves there's an opportunity, and they lose. Not because the market is cruel, but because they couldn't handle the quiet. My story: I used to trade just to fill the void. In my early days, I'd boot up at 8 a.m. feeling restless. No clear setup, but I feared missing out. Feared the day would feel wasted. Feared I was being lazy if I didn't enter a trade. So I entered, even when it felt off, even when it broke my system. Result? SL, then another, then regret. Blamed choppy market. But deep down I knew, open quote, the market wasn't the problem. I just couldn't sit with stillness. Close quote. Trading is not always about action. In a typical trading day, 90% of the time, observation and waiting, 10% of the time, execution. If you don't understand this, you'll trade 100% of the time. Always chasing, always forcing, burning yourself out to feel productive. Why silence matters. It's where you meet yourself. When the market is quiet, your inner world gets loud. You'll discover your impatience, your dopamine cravings, your fear of missing out, your belief that I'm not good enough unless I win. That's where mental training begins. It's where your system gets sharpened. You can't refine a system while in a trade. But during the wait, you can. Review past trades, optimize your checklist, journal your emotions, spot flaws in your logic. It's where real resilience is forged. Real traders aren't shaped by wins. They're built on days when they take 0 trades but still show up for 4 hours. How to trade in silence the right way. 1. Set fixed observation windows. Don't sit all day. I pick 2 time slots, 9 a.m. and 2 p.m. In those windows, I camp out like a watchman. No setup, do nothing. But I still observe, still take notes, still stay focused. 2. Shift focus from entry to rhythm. I stopped asking, can I enter now? Instead, I asked, what's the market rhythm right now? Focusing on rhythm removes the urge to force entries. 3. Journal what you didn't do. Sounds strange. I write 9, potential zone but weak volume, no trade. 14, heard, setup didn't meet all 3 conditions, pass. Writing it down shows me I did make decisions, just disciplined ones. 4. Detach from daily expectations. One reason we panic in silence is this toxic expectation. I must make money today. I used to think at least plus 2R every day. Now I know, open quote, A plus 0R day is still a win if there was no valid setup. Close quote. Tie 5. Turn silence into a ritual. Instead of treating silence as wasted time, I turned it into training. Set a 45-minute timer, play ambient background music, block social media, observe charts like a sniper, write down every shift like a market journalist. This built presence, awareness, and logical reflexes. Results: after 60 days of silent trading, overtrading down 90%, entry precision skyrocketed, mental clarity during trades improved. Most importantly, I felt in control, not controlled by the trade. Survival guide for trading in stillness: situation, old reaction, new response. No setups, panic, force a trade, note it, observe rhythm, flat market, force entry, wait for volume, near session close. Trade out of FOMO, shut down, accept rest. My ideal trading session today, 8:30 a.m., light warm-up, emotion journal, 9 to 10. Observe, open only the chart, 10 to 11 p.m., no valid trade, note rhythm and rest. 14 to 15, second session, enter only if checklist is green. 15, review, shut down, 80% of my days is no trades, 100% of my days equals active training. Open quote, good trading doesn't come from trading well, it comes from knowing when not to trade. Close quote. Those silent hours, sitting alone with the market, that is where character is forged. If you're not afraid of silence, you've already outgrown 50% of traders, because most will panic in it. But you'll train in it, avoiding the beginner traps, the psychological pitfalls that drain your account in week 1. Open quote, no one enters the market to lose money, but almost everyone does by walking right into the traps they were warned about. Someone who blew their demo account, then their real one. Close quote. What I wish I had understood sooner. On my first week trading, I opened a real account with $200. I thought I had learned enough, understood technical analysis, and was ready. 6 days later, I was left with $11. Not because the market was brutal, but because I was naive. In this chapter, I'll break down the 5 most common traps that cause beginners to lose money instantly and how to escape them in time. Trap 1. FOMO. Jumping in. Because you're afraid to miss out. You see others post winning trades in a Telegram group. You see a coin pump 10% in 15 minutes, and you think, I need to get in now before it's too late. That's the fear of missing out. I once bought an altcoin because 5 people on Twitter said it's about to moon. It had already pumped 40%, but I still entered. 15 minutes later, minus 23%. I didn't understand the context. No stop loss, no idea where the nearest resistance was. I just jumped in, afraid to miss the train. Lesson: if you didn't see the setup before the move, that trade is not yours. No trade is worth chasing blindly. Trap 2. Revenge trading. Fighting the market. Fight and lock it. After a loss, you get stopped out. You're angry. You think, that was just bad luck. My stop was too tight. I'll get it back. So you place another trade, quickly, with little analysis, just to recover. At that moment, you're no longer trading. You're fighting yourself. I once lost a BTC trade, then opened 3 more within the next hour trying to recover. Result? Lost all 3. Lesson: there's nothing to get back from the market. After a loss, shut your laptop for 15 minutes. Step away from the mouse, reset your mind, or you're fueling a chain reaction of errors. Trap 3. Over-leveraging. Leverage isn't a shortcut. Margin platforms offer 20x, 50x, even 100x leverage. It sounds tempting. One good trade and your account triples. But here's the truth. One wrong trade and your account is gone. I once entered an ETH trade with 50x leverage. All it took was a 2% move against me, and I got liquidated. It moved 2.2% in 3 minutes. I didn't even know what hit me. Lesson: leverage is a magnifying glass, not a magic wand. It magnifies every mistake. Stick to 3x or lower, even 1x, until your system is solid. Trap 4. Copying signals without understanding. There are hundreds of groups sharing daily setups. As a beginner, it's easy to think, open quote, just copy the pros and I'll win. Close quote. I subscribed to a 39-month signal group. They sent 2 to 3 setups per day. I made a little on wins, but on losses, I had no idea when to exit. When the price reversed, I waited for them to say exit. By the time they did, I was down 17%. I realized I wasn't trading, I was blindly gambling. Lesson: if you don't know why you're in a trade, you don't deserve to be in it. No one can carry the responsibility of your account but you. Trap 5. Treating trading like a casino. Most beginners don't journal, don't have a system, and don't backtest. They just feel good about this price and enter, or sense it's going up. I did that too, and I lost, repeatedly. When I finally started journaling, I saw the patterns. I entered trades out of boredom. I had no clear expectation. I used random position sizes with 0 rules. Lesson: if you don't act like a professional trader, don't expect professional results. Trading isn't gambling. It's a career that demands systems, mindset, and discipline. Try survival checklist for beginners. Question: if your answer is no, don't take the trade. Do I fully understand why I'm taking this trade? Do I know my stop loss and take profit points? Am I okay with losing this trade? Am I trading because I see a clear setup or because I'm bored? The traps in your first week aren't because you're stupid or lack skill. They exist because trading is a place where emotion easily overrides logic. But if you can see the traps, you can sidestep them. And as I've said many times, open quote, survival is the biggest success in your first 90 days. Close quote. Building your trading journal, the silent teacher behind every successful trader. Open quote. Every successful trader keeps a journal. Every losing trader thinks it's unnecessary. Someone who traded for 6 months and couldn't remember a single reason why. Close quote. Why you need a trading journal. When I first started, I thought trading was about one thing. Open quote, buy low, sell high. Close quote. I treated it like a short-term skill game. Get the analysis right, make money. Get it wrong, learn something. But the deeper I went, the scarier it got. I couldn't remember what I did. Why did I take that trade? Did I even place a stop loss? What was I feeling at the time? Was I following my system or just a hunch? My account kept bleeding, and I had no idea where I went wrong. That's when I started journaling, not because I wanted to, but because I had to, if I wanted to survive. A trading journal is not just a trade log. Most people think a journal is just this: bought BTC at $2027, sold at $27,000, profit $800. That's a log, not a journal. A true journal reflects your thought process, emotions, and decision making. It's a tool to understand yourself, not just your trades. A real trading journal should answer 5 key questions. 1. Why did I enter this trade? Was it based on my system or a gut feeling? 2. What did I feel before, during, and after the trade? Excitement, anxiety, revenge? 3. Did I follow my rules? Were my SLTP set correctly? Did I overtrade? 4. What did I learn from this trade? What strategy worked? What failed? What does this trade reveal about my psychology? When do I tend to lose control? Asher, a journal template I use: time, pair, reason for entry, SLTP, result, emotion, lesson. 1040 reading con 40 AM BTC USDTT breakout with rising volume, SL minus 1/5%, TPP plus 2.8%. Nervous but planned. Breakouts work well with volume confirmation. 2 p.m. E entered at support, emotional, no SL minus 4.2%. Rushed, uncertain. Don't enter without a clear plan. Just 3 entries per day like this, and after a week, you'll start to see your behavioral patterns. What I discovered, thanks to my journal: I trade poorly in the afternoon. Brain fatigue, more prone to FOMO. I spiral after a big loss. Immediate revenge trades. I only succeed when I follow breakout plus volume setups. All other setups had low win rates. If I hadn't written it down, I'd still be trading on emotion and wondering why I kept losing. Why journaling works: because it forces you to slow down. Trading is fast, price moves, emotions spike. You react, but journaling makes you pause and ask, open quote, what did I just do? Why did I do it? Was it worth it? Close quote. That's how you turn emotion into awareness. 3 journal styles. Pick what suits you. 1. Pen and paper. For those who like to write by hand, feels more personal, deepens memory and reflection. Tip: use bullet points and highlight key mistakes. 2. Excel Notion. For structure lovers, automate stats, filter by date, win rate, system errors. Tip: add a discipline score 1 to 10 column. 3. Voice journal. For verbal processors. Record your thoughts after trades. Transcribe later. Replay your emotional tone before mistakes. It doesn't matter how you journal, only that you do it consistently. How often should you journal? At minimum, 1 journal entry per trading day. If you don't trade that day, write 3 lines like, open quote, no trade today due to lack of clear signal. I'm stabilizing my emotions. I studied a breakout case this morning. Close quote. Your journal isn't a place to brag. It's where you train your psychology and uncover the truth about yourself. Turn your journal into a weakness detector. After 30 days, sit down and review. Which setups won the most? What mistakes do I repeat? What emotions lead to losses? Which rules do I break the most? This is your personal training manual, more valuable than any course. Why most beginners skip journaling. Laziness feels like a waste of time, but without it, you won't improve. Fear: don't want to face their own mistakes, but not facing them equals repeating them. Overconfidence in charts, but 90% of losses come from psychology, not patterns. A trading journal won't make you win overnight, but it will help you stop losing foolishly, and that's enough to survive. The silent teacher. Your trading journal is a mentor that never yells, but always tells the truth. Every successful trader I know, from crypto to Forex, keeps track of everything. Because only when you understand yourself can you truly understand the market. Trading longevity: the art of surviving to win the long game. Open quote. Trading isn't for the smartest, it's for the ones who last the longest. Someone who watched 5 of their own accounts burn in a single year. Close quote. Tash, the real question isn't how to win fast. It's how do I avoid getting kicked out of the game too early? When I first entered the market, I believed, open quote, if I can double my account a few times, I'll be rich. Win fast. Quit early. Close quote. I entered like a rookie soldier with grenades but no armor. I won a few trades, then lost it all. I reloaded, made a bit back, lost it all again. I didn't lack strategy. I lacked survivability. Winning for a week is easy, but winning consistently over 1 to 2 5 years, that's different. Most new traders set the wrong goals. Make $100 every day, double my account in a month, copy trades and make 30% quick. What you actually need, don't blow up in the first 90 days. Stick around long enough to figure out who I really am in this market. Build a repeatable model that emotions can't destroy. Why most traders get wiped out. No control over losses. No stop loss, maxed out leverage, revenge trades. No idea who they are. Copying styles that don't match their psychology. No time to try, fail, and learn. Accounts die before lessons can sink in. Trading equals a long game career, not a speed run. I once knew a trader who made a steady 5 to 10% per month. I asked him, open quote, what's your secret? Close quote. He said, open quote, nothing fancy. I just keep it simple. But I've never let myself lose more than 10% in a single week, because if I still have an account, I still have a chance. Close quote. 5 survival principles in trading. 1. Small losses, big wins. Limit loss per trade to 1 to 2%. Let winners breathe. Always ask, if I'm wrong, how much will it cost me? 2. Don't trade every day. Not every day brings opportunity. Not trading is a win if it saves you from dumb losses. 3. Learn slowly. Build steadily. Don't rush to master the market in a week. Pick one strategy, one time frame, one asset, master it first. 4. Focus on process, not profit. Don't stare at your account balance every hour. Track whether you're following your system well. 5. Demo accounts are valuable. If used right, treat demo trades like real ones. Keep a journal. Track emotions. Only move to real money after one stable month. The most dangerous phase, early success. Many fall into this trap. Start trading, make a quick 70% win. Think, I'm a natural, increase position size, ignore stop loss, blow up in 3 days. Early wins cause overconfidence. Surviving teaches you humility. Your 90-day survival plan. This is how I structure the survival phase for beginners. Month 1, observe, learn, no real trades, read charts, backtest systems, journal your emotions, learn to recognize FOMO, revenge, greed. 2, serious demo trading, set strict limits, always use stop loss. Focus on rule following, not profits. Write full journal entries. Month 3, controlled real trading. Use a small real account, e.g. $100, risk 1% per trade. Weekly reviews, not just profits, losses, but behavior patterns. The long-term mindset. I am a work in progress. Don't think of yourself as a hidden genius. Think of yourself as a trader in development. You'll make mistakes. You'll FOMO. You'll lose. But if you survive each blow, you're evolving. Open quote. Trading isn't about finding a perfect system. It's about becoming the person who can follow a stable one. From my journal, month 4, close quote. A true story. I almost quit before it clicked. In month 6, I lost for 3 weeks straight. I was ready to delete Binance. Then I opened my journal. I saw a line I wrote earlier. Open quote, if I quit now, I'll never know if I could have made it. Close quote. I took a week off. Reviewed my system. Made one small fix, avoid trades during major news. The next week, 4 consecutive wins. I wasn't rich, but I was alive and I could keep going. Trading isn't for the impatient. The market doesn't care how badly you want to get rich. It only reacts to your behavior. If you act like an impulsive gambler, it will crush you. If you're patient, reflective, and protect your capital, it will give you another shot. Survival is the first form of mastery. The Phoenix Protocol, rebirth after failure. The market doesn't kill you. You kill yourself when you refuse to learn from pain. 1. You will lose. The question is rebirth or surrender. In crypto trading, failure is inevitable. Everyone has blown an account. Don't believe otherwise. The real question isn't, will I fail? It's, how will I respond when failure happens? 2. I was once my own worst enemy. I've held on to losing trades until my account died. Revenge traded in anger. Swore I'd never repeat mistakes, then did them again in 3 days. Avoided charts out of shame. Failure in trading doesn't just hurt your wallet. It crushes your pride, your ego, and your self-trust. But from that rock bottom, I learned, winners aren't the ones who never fall. They're the ones who rise with a better system. 3. The Phoenix Protocol. 5-step rebirth plan. Step 1. Cut everything. Disconnect immediately. After a major loss, don't open charts. Avoid social media and signals. Don't trade with must-recover mindset. Instead, power off, walk, move, rest. Write out feelings, sleep. You can't reboot while still emotionally hijacked. Step 2. Write it down, without self-blame. Log 3 things. What caused the loss? Technical, emotional, both. What destructive pattern repeated? What were you thinking and feeling? Not to punish yourself, but to identify your inner saboteur. Step 3. Classify the loss. 3 types. Valid loss, followed system, market flipped, accept. Behavioral loss, broke rules knowingly, fixed behavior. Systemic loss, followed system, still failed, optimized system. Misdiagnosing loss equals fixing the wrong thing. Step 4. Reprogram, rules over willpower. Don't say, I'll try harder. Instead, identify the behavior, create a replacement rule, add it to your system, post it visibly. Rebirth equals new behavior structure. Return as a smarter beginner. This time, smaller size, fewer trades, more patience. Focus equals executing the system, not chasing profit. You're not starting from zero. You're starting from a hard-earned lesson. Nash 4, a true story. My most memorable rebirth. I went full margin on BTC at 32K, felt invincible. Lost 70% of my account in 6 hours, shut the laptop, wrote everything down. After 3 days, 1 pair, max 1% risk. Stopped trading when emotional, recovered all losses in 3 weeks, not from better analysis, but by not repeating old patterns. Initial 5. Why you need a protocol. No one gives you a map after failure, but your own recovery process will help you. Avoid self-blame, stop panic trading, prevent more losses from proving yourself. Evolve with every setback. Our 6. Phoenix Protocol Summary. Step, action, goal. Rewire mental system. 1. Emotionally disconnect, reset nervous system. 2. Journal the failure, spot internal patterns. 3. Classify the loss, respond appropriately. 4. Fix behavior plus add new rules, rewire mental system. 5. Restart as a student, trade logic, not emotion. 7. Trading is rebirth, not just victory. You don't need to be perfect. You need to be persistent. You need to learn, even when bleeding. Open quote. The most successful traders aren't the ones with the biggest wins. They're the ones still standing after the worst losses. Close quote. Each time the market knocks me down, I rise with one better rule. I don't need to be stronger, just wiser than last time. If you've ever lost, comment below. I'm not losing, I'm being reborn.